Hey everyone, Dan here. We are on Sunday night, June 27th. Before we get started in this trading week, I wanted to take a look at CCIV. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And please also know that I have put in the description a link to a Google form where you can drop your email if you want to put that down as a placeholder for a future newsletter that I'm going to be launching. That's a couple of months away, but it's both an opportunity for us to communicate outside of the YouTube channel. It would just be 1 to 2 emails a week, and it'll allow me to sprinkle in a bunch of other info that I just don't have time to make videos on. And also, I don't expect anything would ever happen to the YouTube channel, but if it does, that gives us a second place that we could fall back to and coordinate from there, what to do if that were to happen. And this way we'd have a line of communication. So if you want to drop your email, that's in the description below. All right, so CCIV, been keeping track of this one for quite some time. I think the sort of schedule for today is we're going to go through and sort of identify some of the charts, the trend analysis side of things. Then we'll flip over and look at some of the news items and the data that might have impact the price action in the days and weeks to come, and sort of come away with some price points to look at, some potential price targets to think about, bounce zones to take positions, things like that. So this was a previous video where we had been charting this down channel. Obviously, it did a good job sorting itself out of that, and then it's had a nice run up recently, so we can get rid of that for now, so it's not just kind of clogging the chart. But over the past 3 months, we are definitely about the highest range. Aside from this one, we're at the highest range that we have been all along, holding above this previous high area here, again, in the past 3 months, not certainly if we extend back beyond that, because there was that insane run up and then insane lengthy beat down that occurred. But let's start plotting some zones here, and the zones that we're going to plot are just really strong support and resistance zones, aka supply and demand zones, areas that historically have shown that they are acting as areas of a lot of demand if the price is dipping into them, and shares tend to get bought up, and so it'll sort of prove out as support. And also then if the price is coming from underneath, it's proven out previously that there is a lot of supply at that price juncture, and a lot of folks tend to sell at that point. So from underneath, resistance, from above, support. And the way that we find that is we look for previous areas that encompass both resistance that then turn to support. So you have support in this area, you have support right now at this zone, but previously it was resistance. And so those tend to be really strong zones. You even have support back here before it was, the resistance in this zone here. We look for a couple of others. Here's another good one. You got resistance, resistance, and then that's also about where it topped out most recently. In between there, I would look at right about this zone here. You have resistance here, you have support here. If we stretch that back, you have all this support here. You have previous resistance points there as well. This is gonna jostle the chart because that's the huge run up that I was talking about. But even then, that price point that we just charted was a support bounce zone when that craziness was happening. So good zone there. And then to the upside after that, what I would look at is right about here, right around 30, and then above 30, I would look for price points right about there, just shy of 34. So this is what I look for in the near term. We should plot a couple of below just in case it does dip for any reason. You have support there, you have resistance here. If we track that back, you have resistance there and there. So I would look for a bounce potentially there if it needs it at 24.58, and then we'll just do one lower, again, in case it's sort of a bit more of a significant dip that it takes. And we have a good one here, support, previous resistance, resistance, and support zone here from which it had a nice run up. So that's what I would look for to your up and downside. If we zoom in a bit, there could be a bit of a channel forming here. This isn't going to be super obvious because I'm going to stretch it a bit. But I would say we have about here to about here. We could be looking for a channel to roll out and ride up. This is still pretty steep, even though it's not directly on these price points at the moment. But let's see if it comes down and sort of like test this lower bound at some points and then test the upper bound again. And if we get a good test of both bounds, then I would say we have a pretty valid channel here, and could give folks who want to play a channel an opportunity to buy a dip, which would be toward the bottom of the channel, like if you had bought the dip here, and then sell out toward or at the top of the channel, rinse and repeat, ride it back down, dip buy at the bottom, ride it back up to the top, so on and so forth. Let's grab a quick look at the indicators, just for good measure. So RSI riding, a smidge high, but nothing that bad actually, given this recent big run up. I've mentioned this before, but the way a lot of folks play RSI, they can be actually quite, it can work out quite well, but you have to be patient. So that's the trick. That's often the trick with trading. There's a strategy here that can work out quite well, but it requires patience, the thing that most traders have the hardest time with. But anyway, what a lot of folks do is they'll wait for a stock to run up into the overbought territory and not touch it. And then they'll wait for it to come down. And if it comes down and bounces around the midline, so around 50 on the RSI, and holds that and makes another run toward overbought, it is in the initiation of that second run up. So you would have taken that position as it started to run up here, in anticipation of it having continued price strength. So you see that playing out here, for example, actually a few times here. So you see runs up, comes back down to about the mid-range, right? And then you see it stabilize and start to build some strength. So you would have taken your position here, probably somewhere around this area. That price is at 24, and you've ridden it into the second run of overbought and probably sold out around 27, something like that, and then waited for it to come back down. And then you would have seen that it doesn't hold the midline at this point, comes back down into oversold territory. But it did something similar here, came into overbought, just barely, but it did, came down just to the midline, started to rise again. You could have taken your position here, about 1921, and came up to stretch the overbought to 2017. So that one's a little less than $1 a share, so nothing in particular, but it's a different way to think about playing RSI versus purely waiting for something to be oversold and buying it and then riding it into overbought, which is still a great strategy, but that's a hard strategy in a stock that is having a bunch of buying pressure at the time, because the likelihood of it coming all the way down into oversold can be quite whatever the opposite of promising is. It can be quite unlikely. And so that way, if you're waiting for that indicator, like for it to come all the way down to oversold, you can freeze yourself out of the trade for a very long time, if that's the strategy that you're kind of wed to. Whereas if you have that strategy, but also the one where you're watching, the roll down to the mid-range and what's going to happen there, that could give you another semi-dip buy opportunity. On the MACD side of things, rolling over itself a bunch of times here. The MACD and the signal line just crisscrossing a little bit, I think, basically trying to choose a direction. It is a bit into the positive territory here, so if it does run up, it's going to have potentially less of a lengthy run than you saw here, where the MACD was sitting on the baseline and had all the positive, run room to the upside. And then here even, it had the crossover in negative territory, which is really what you want. Like here, it had a bullish crossover. Here's a good lineup for you. It had this bullish crossover right here as the RSI was coming out of oversold territory. So that would have been a really good coupling of the indicators in order to take that position. So that's what I would look for on the CCIV side of things with the chart and with the indicators. If we want to just flip over to some other catalysts and things to think of. So this came out just a couple of days ago. 2 days ago. Okay. So CCIV shareholders are now slated to approve the merger on the 22nd of July. So that gives us, about 3.5 trading weeks or so. And if we come down here, it looks like previously they were going to, bear in mind that CCIV had previously intimated the 23rd of July as the date on which the business combination agreement would achieve closure. So, if they can get the approval and the turnaround quickly, that would be great. So that could be a really big catalyst coming up toward the third week of July. So be aware of that if you're looking to just kind of ride up some like hype as things start to actually roll from SPAC to Lucid, whatever their ticker is going to be. And then the other thing that'll probably happen is when the actual ticker change occurs and that merger is sort of settling in, then there will likely be a big run up at that point too. Ultimately cooling off at some point, of course, and kind of catching itself, settling into a zone, if you will. The only other thing that I wanted to mention really quick is, just because we saw this with IPOE as it rolled into its merger with SoFi, and it's like pretty destructive on several fronts. The short interest is creeping up. It says from Ortex, as of Friday, they estimated almost 20% of the free float being shorted. And so, that's getting into pretty high territory. The other thing that I would keep an eye on is the fails to deliver. So these are shares that people sold, and then the buyer exchanged cash for that. So the cash went out, obviously, as you know, if you've ever bought a stock. And then that person who was supposed to locate and deliver the shares that the person bought, they couldn't or didn't do it. And so these fails, they age over time. These ones are pretty impactful. These are over 1 million. On May 24th, there was, about 1.5 million here, 1,558,211 failed to deliver. And then on the 25th, 1 million, just say 1.3, and then still over 1 million on May 26th. We see a lot of things happening about 30 days out from these fails to deliver, as there is, the potential for regulations and rules to catch up with some of these folks if they continue to not deliver these shares. And so you could see some potential spiking 30 days out from any of these, like over 1 million fails to deliver on any given date. So just keep an eye on those. But we saw a ton of fails to deliver happen on IPOE before it merged with SoFi, just very, very close in. So we might see a bunch more as that merger date starts to come to a close and is sort of realized. All right. Well, I appreciate you all watching. There's a few things in the description below if you want to have a look, and if anything's interesting to you, click a link. Feel free to do that. Feel free to share these videos. That helps a ton. Reddit, Twitter, Facebook, wherever you share stock stuff. And all right, that'll do it for this one. I wish you the best in the week ahead, and I will see you in the next video.